price.
All right, back to the markets now. It has just been an unbelievable historical week for these markets, and it continues this morning. U.S. futures right now swinging triple digits now to the downside. Looks like we may have a lower open on Wall Street 3 hours from now. And take a look. We've got the S&P 500 futures, by the way, off 0.8%. Even losses across the board there. While we watch oil this morning developing as a huge story, it has been a story mostly to the downside, has been the trend there, with oil dropping below $40 a barrel this week. Well, we had this huge rally yesterday, and now oil prices firmly above $42 a barrel. So now, after seeing the biggest one-day gain in almost 4 years, does the rally continue? We want to bring in Wells Fargo chief economist John Silvia. Good morning, John. I know you have all the answers for us this morning. Do oil prices continue this one-day move higher yesterday? Does it continue?
Yeah, I would suspect that it does continue at a moderate pace. I think what the market's going through is trying to revalue what exactly is Chinese economic growth and its implications on the global marketplace. I think there was a lot of pessimism initially about a week ago. Then there was the Chinese revaluation. And then, okay, now we're concerned about growth. But as we've seen during the week, a lot of good numbers have been coming out. And that does suggest that oil prices probably have bottomed here and are moving up over time.
But I mean, John, isn't this naturally just what happens? I mean, this is sheer economics. When you get a drop in prices, you get a pickup in demand. I mean, I'm going to turn to Darren here because this is what happens.
Absolutely. And, you know, we've seen demand increase by 1.5 million barrels per day globally. As a result of this drop in prices, people are buying more SUVs. All of that is kind of playing itself out as expected. I think the one thing that we haven't seen as much of is increase in consumer spending because people are repairing their balance sheets internally.
So, John, anything surprising you here when it comes to looking at the energy market? We've been looking at the equity side of things. Energy sector in the S&P 500 led the gains on Wall Street yesterday as we saw that rally in crude.
Well, I think the first thing over the last 6 months has been the sustained production levels in energy, particularly, again, shale oil in the western part of the U.S. I think that has been a little bit of a surprise. I think a lot of people expected a lot more shutdown there. Second, there has been a cutback, certainly in equipment spending and construction for those industries, but production has remained pretty solid.
I mean, well, look at that. Year-to-date, crude prices still down 20%. So you're still looking at crude in this bear market territory. And, David, as I turn to you, very much a political point because we're looking at still continued job losses here in the United States as a result of this drop in oil.
Two factors. One, you have just the economics and of people's confidence, and they're not going out and traveling more. They're not doing things that require the use of oil and gas, and that hurts the sector. But equally, the number of regulations and the number of taxes we continue to see coming out of government policies have an impact. And unfortunately, what that potentially not only causes job loss, but also you're going to start potentially see more consolidation in the industry, which costs more jobs. It's why the economy continues to rank high on people's concerns.
Carl Icahn yesterday took a stake in Freeport.
That's a
One
good
of their
sign.
big assets is oil.
Yep.
When they bought PXP and MMR.
The fact that Schlumberger stepped in to buy Cameron, that was a big move, too.
Yeah,
it goes to what Phil Flynn was talking about these kind of shakier plays will get snapped up.
So, John, we've got to leave it there. A few seconds left. If you were to look at a specific price in oil, where are things going to go? How are they going to play out?
Well, I would think probably about $55, $60 by the end of this year.
All right, there you have it. I asked for a short answer, and we got one. All right, John Silvia, thank you. Diamonds might